Can you please put plus or something like that, just to display that you can hear me? Okay, great. So tonight we're going to look at apparel industry, like for clothes. We already looked at this industry when we discussed course. I'm just wondering who was at that master class? Has anyone been there? Okay, great. So did you make all the money 45% extra? Because it's moved up a lot since that moment. It was quite challenging this time for me to find a company which satisfied all my criteria for choosing the company, because the market is quite high right now, and I didn't want to go and analyze the company which we already analyzed recently. So that's why I found completely new company, and it looks like very good one. Okay, in any way, so I'll let you to decide if you like it or not. So, okay, first disclaimer, as always, remember, especially if somebody is watching it online, you have to understand that it's a seminar for education purpose, and even though we're discussing the company in details and showing the strategy, it's for education purpose. You have to make your own decision. Please put, guys, pluses that 2 pluses that you understand that. You know. So, hi Jonas, hi Dory, hi Nona, hi Ian, hi all of you guys. All right, perfect. So let's start in this case. Plan for today, as always, we're going to look at current market situation and what we can expect from that. Then we'll look at specifically industry, apparel industry, and then we're going to look at fundamental technical analysis of Hanes brand. Okay, and so we'll see, is it a good company, is it an undervalued company, and what kind of strategy we can use if we decide to open position with that specific company. Okay, let's start from the market is making new highs. It's like unbelievable. Every week we're saying, oh, it should go down. Instead of that, it's going up and up and up and up. So this is a trend which is going from 2009. So it's already nearly 9 years. And currently, like, I mean, not currently, from the moment when Donald Trump was elected as a president, it's increased its speed. So, and from the kind of slow line of this trend, it's moved to the fast line, and now it's broke through and moving even higher. Now, if you look at PE ratio for Dow Jones or S&P 500, you will see that PE of index last year was 22. This year it's already 25. So despite some companies, they showed better results than last year and they improved their earnings, but the prices of their stocks moved even higher. And like, I want to point to the fact that despite the earnings are growing, price growing much faster than earnings. And it cannot be sustained like forever. So at some point, there are 2 things can happen. First thing, the prices will stop growing and the earnings will keep up. You know, so the earnings will continue to grow, and then eventually they will have normal adjustments like for PE. Or the most likely scenario, the second scenario, where the price of the index will be adjusted to the earnings. Okay, so in this case, the index has to go down. Okay, and when it happens, we don't know. There has to be a certain reason to trigger that, and we don't know what is going to trigger. Even though, like, when we look at this drop, which was happening last January in 2016, not last January, it was already January before. No, actually 2016. So we had this big drop, nearly 19%, and there wasn't any reason for that. So most likely something like that might happen. So you have to be prepared for that. Last Saturday, I was at the event where Mary Buffett, the daughter-in-law of Warren Buffett, she was in Sydney, and I went to her event, and it was quite fascinating. She's already quite, like, you know, so old lady, and but she has great experience because she spent so much time with Warren Buffett. She could share his kind of, you know, traits, how he behaves in certain situations. And she says that, like recently she spoke with him, he keeps now around $108 billion in cash. And he's waiting until the market collapses in order to catch up. But at the same time, Warren Buffett himself, I watched his interview, he said that there is nothing right now which can stop this kind of index down. And the reason for that, he said that because still, despite the like interest rates went up, they're still quite low, and people borrowing like hell. They're borrowing, they're spending, because they understand that a couple percentage, 1% a year, it's not that bad. So they borrow, they buy stuff, and of course, when people borrow and buy, it pushes the profit of companies, and as a result, the prices are going up as well. So if the tightening will continue, and the interest rate will increase, people will borrow less, they will spend less, companies will make less money, and as a result, the prices will be adjusted, so the price can fall. Another thing which probably drives the market up, that the European banking system in some countries, they charge negative interest rate. So people are not happy with that. They have to move their cash somewhere else. And probably the most likely scenario is to move to stock market and to buy some kind of companies which pay dividends. Because any dividend, if it is 2-3%, it's still better than to keep money in the bank or buy bonds, because bonds, they're not profitable right now. So that is why we don't know that what can we expect from the index itself. So all other parameters, like economical parameters, they're still good in US. So, but I don't believe that this type of uptrend can sustain quite a lot. So, and if we look at this, if it turns around and pull back, okay, first of all, it's like a testing this top resistance. It might go back to about 22,500. So, which is 1,000 less than current price. So it's about maybe 4%. Quite easily can happen any day, like within this week or something like that. But even if it has a drop, let's go for this step. So if it goes to around 20,500, it still would be a line of uptrend. And even if it goes to the 19,500, it's still going to be in the uptrend, which lasted for the last nearly 9 years. And this drop from 23,400 to 19,500, it would be about 4,000 drop. So it's like just below 20% drop. It's quite huge when you think about the market. So that would be really, really emotional. But the interesting thing, that would be still in uptrend, which is lasting for quite a while. So be ready for that. But if it's something like that happens, don't be afraid. But right now you have to be prepared for that. In what sense? You have to choose companies which are strong with fundamentals, and usually when the market crashes, people start moving money from the companies which less, let's say, not that kind of, let's say, when people don't believe in the company, they wouldn't put money in there. They put money in real good, solid companies. So that's why if we're choosing right now a company, please choose which are really, really good. Don't try to buy very, very suspicious companies, we can go really, really down. Okay, that's about Dow Jones. And also we can see that indexes themselves, they kind of show a bit of weakness in the Dow Jones index, so it's very easy they can go a bit low. Now S&P 500, similar situation, also from 2016, it started moving up, and after election of Donald Trump, it's continued to go even higher, and it's like making high every week. And again, we can see it's still an uptrend. It didn't break like Dow Jones, it's still here, but it's at that resistance level. So it's quite easily can go to 2,100, which is about 480 points drop. So it's about 20% drop as well. quite easily can. And even though situation like that happens, it's still going to be an uptrend. And Compaq, similar situation, moving quite higher. And actually, this index has high P ratio because a lot of companies in they have much higher multiples. So if we look at Dow Jones or S&P, and some companies they trade 20, 25, 30 P ratio, whereas in Compaq I know a lot of technological stock which trade at 40, 50 P ratio. And they drive the price of the index quite high as well. But again, we can see that it's an overbought situation too. If we look at VIX volatility index, the best environment is high, and it is better to stay from the market a bit and wait until it went low. Now it's kind of in the middle, and we can see that these high points, they're going lower, lower, and lower. Okay, that was in 2016, in the beginning of the year, when the market went down quite a lot, and we can see that it was fear in the market, and that was the best time to enter positions and buy them. At the moment, it's not so good because market is so high, and majority of companies they overvalued, overpriced. Okay, so people paying too much money, and we can see that the low points is VIX is low and low, but it's around $9 here. It's quite low here. If it drops down, so don't buy at this particular moment. Wait until it goes at least to $12, $13 on that level. So at least here, try to enter your position. So even though we're going to discuss this company today, you have to understand that if tomorrow, day after tomorrow, market will have pullback, like a small one, maybe 2, 3, 5%. Okay, you still will see the move in your specific companies as well. So, and that will represent better opportunity than it is right now when the market is high. Okay. Now, okay, guys, is it all clear about index? If yes, please, we'll continue.